For more on the economy in Japan, Ed Rogers joins us. He is the CEO, the CIO of Rogers Investment Advisors. Welcome back to the show, Ed. Again, joining us live from Tokyo. Let's talk about the Bank of Japan, the stimulus, the bond buying, all the above. Is it working?
Good morning. Thanks very much for having me back on the show. I think your question, is it working? It's a little bit premature to expect that tomorrow we start to see a 1% rise in inflation or a 2% rise in inflation. What's far more likely is that we see very strong steps being taken by Kuroda-san. The directionality is very important here. The immediate steps we expect we can see are basically going out the yield curve as far as buying bonds, making sure that you're suppressing longer-term yields, and simply a more cohesive approach to whether it's an incremental step-by-step or there's some big steps forward. It doesn't really matter. What we have is a cohesive approach to the goal of achieving 2% inflation over time.
You mentioned the bond purchases, and there's some discussion of whether or not they should continue, but I just want to point out the reason why the bond purchases are generally a good idea because it pushes long-term rates lower, and in Japan, they do have relatively low long-term rates. Is it a demand issue, or does it require additional monetary stimulus with respect to the bond purchases?
You know, this might be a kind of a contrarian view, but I actually think it's a confidence issue first and foremost. It's not so much the technical buying of 3-year versus 10-year versus 30 years out. It's the fact that the government is committed to achieving inflation as a goal, and I think they'll be flexible in their approach. If it needs 5-year purchases or 10-year purchases of bonds or 30-year, they're going to do what it takes to achieve inflation. That's what's important here. The technical issues of month-to-month or even day-to-day movements and whether they're going to spend 6 trillion yen or 8 trillion yen in the following months, that's not so important. It's the directionality that's very important to keep in mind.
Ed, you're going to kill me, but I have a really silly question for you. Why is inflation good? Help us, audience, understand why would the Bank of Japan want to see a level of inflation?
Not a silly question at all. It's a great question. What we're fighting here is 20 years of mental depression and anguish amongst the average Japanese consumer. People put off buying houses, they put off buying cars, they put off buying anything that they have to buy because tomorrow, under deflation, it's going to be cheaper to wait until tomorrow. When you believe that inflation is coming and that it's going to be more expensive if you wait till next week or next month to purchase a new house or to buy a new washing machine, to buy a new car, people start to speed up their purchases. And that creates a virtuous effect. When people start to buy things more, companies make more profits, they'll pay workers more. We create a virtuous circle of rising wages. I don't know if you've noticed my tie, it's not very seasonal. I've got the 12 days of Christmas here on this tie. Well, for Japanese investors and Japanese consumers, we're in for the 12 months of Christmas in 2013 because there'll be positive news and positive surprises as the inflation expectation builds.
One final question, and it's not about your tie, Ed. You know, in Economics 101, you learn supply and demand. If there's less supply and there's more demand, the prices naturally go up. Does this apply in this particular scenario when you talk about housing and cars and jobs and wages?
Absolutely, yes. And there's some other factors coming into play. For example, April 2014, the national sales tax is going to increase by 3%. So you know for sure you've got basically 1 more year to make a major purchase. For example, a house purchase, you save 3% if you go off and you do that sometime before that tax is raised. So there's more than one factor at play here going into, again, creating in the overall mind of the consumer, should I spend money now or should I wait? The answer more and more is inflation's probably coming, the government is going to pursue this, I need to spend money now, and that's going to be very positive overall.
Ed Rogers, with the name Rogers Investments, thank you very much for helping us answer some key questions here.